got some exciting content to share with you today surrounding critical illness specifically. For those that are unfamiliar with Humania, Humania is a leader in digital issuance and specifically instant issue type products. Whether it's life, CI, or DI, we normally have a solution that's outside the realm of what traditionally underwritten products can offer. I'm going to be talking to you a little bit more about that today. Why critical illness? When we talk about critical illness with our clients, we know as brokers the concerns surrounding critical illness, especially cancer. Cancer is a big one because, of course, you get diagnosed, you got to go through treatment, and that treatment is going to last at least 6 months. Assuming that it goes well, it'll be at least 6 months, right? And if it doesn't go well, it can trudge on. And during that time, you might be working, you might not be working. But if you are working, it's going to be harder. Moreover, you're going to have additional expenses because you're going through these treatments for additional resources and supports that you probably don't need because you weren't sick to begin with. It's an important insurance and something that we don't sell nearly enough of. We know that for every 10 life policies sold in Ontario, one living benefit policy is sold. And that's just simply not enough. And I would argue, having been in the industry and both as a broker and on a wholesaling side, that critical illness is something that we might shy away from just because of the underwriting process. It is more stringent. Morbidity underwriting differs greatly from mortality underwriting. And especially when you get into those older age groups and even in the 50 plus, which I wouldn't consider necessarily to be in the older age group, but from a risk perspective, it goes that much higher. So having some instant issue simplified options can do two things. One, give you clients a solution that doesn't require any kind of major underwriting. So they don't need to worry about going through all these tests to find out that they don't qualify and getting mad about it. And moreover, solutions that might actually go a little bit farther and go past that 75-year point that we're so used to offering. What if I could tell you that critical illness can actually be offered on a temporary basis all the way up to age 90? These types of solutions exist and can be quite helpful for your clientele. When we talk about claims specifically, we know that cancer is the big one. Okay, we know that cancer is and that's not even including benign brain tumors. But we're talking about cancer specifically. It's the mother lode when it comes to critical illness claims, followed not far behind by heart attack and stroke. MS, you can see there, although covered under most 25 illness type policies, is only about 2% of all payouts. As far as the frequency of diagnoses, it's only going up. We know that as of 2019, and this data is only continued to go up as far as I know, with looking at one diagnosis every 3 minutes. Well, one and a quarter diagnoses every 3 minutes. So it's a significant impact to the populace, and it affects a lot of people. We know the 1 and 2 number, and that we've been very familiar with that for a long time. What you probably don't know is that the vast majority of the reason that, the vast majority of people who get diagnosed are the age of 50 or older. So even if you've been healthy up until that point, that means nothing. 90% of the time you're going to be diagnosed after the age of 50. It's just a question of when. And we look at retirees specifically, we know that 58% of all people who get diagnosed with cancer are already retired. So these are individuals that are already on a fixed income and perhaps can't afford the experimental treatments that aren't covered through their government health insurance. So in terms of what people do when they do get, require additional funds, they look for debt, they look for savings to be able to pull money from. Usually it's from their homes, but if they can take out loans or go dip into their savings a little bit, that's usually what they end up doing. When we look at the financial burden of cancer, we know that it costs about $3.2 billion just in lost wages. That's lost wages. That's people who can't work because of cancer. That's lost every single year. And I assure you, with inflation going the way that it is, that number is only going to go up. Now, why critical illness for somebody who, say, maybe has disability through their work? Maybe get that pushback. Say, well, I've got to get coverage through work. And it's like, okay, well, let's take a look at that. And they've got a pretty good DI plan. Well, let's look at Janet here. She's 40 years old and a human resource manager. She lives a fairly normal life, makes pretty good money, about $100K a year, lives in Ontario, and she's not concerned. She has DI, and that should cover not just cancer and other critical illnesses, but other injuries as well. So taking a look at that, you say, well, let's run that scenario. Let's take a look at what happens if you actually go on claim. Well, in January 19th of 2017, she is unfortunately diagnosed with stage 3 breast cancer. Okay, life-threatening. Luckily, she has a disability plan in place. Now, she's going to get $4,850 once her claim starts. But bear in mind, there's also a waiting period. Most long-term disabilities have a 90-day wait. So you have to wait those 3 months before you see a dime from your disability plan, even on a perfect claim like this one. Now, the benefit will go to 65, so if it'll go for as long as she needs it to, but she's going to have to make do in the interim for that first 3 months. So when we look at her income prior to disability versus on disability, before disability, she was actually taking home $6,072 odd dollars. When we look at her disability benefit, it's $4,850. So she's already taken a bit of a pay cut. When we take a look over here, the lost income due to disability over the course of 1 year, you can see there's the 3 months of purely lost wages, and then there's 9 months of disability where she's still losing a little bit of money. So all in all, she's actually lost about $11,000 in lost wages alone. So we'll take a look at that, and then we look at the that's after tax. We're not even taking into account the other gross components of it or bonuses. But when you take a look at it in its entirety, she's actually losing about $29,000 odd dollars, even with a perfect disability claim. Given the circumstances, don't you think that Janet should have at least 100% of her income? Maybe not even a little bit more if she has like additional expenses. That's where critical illness can help top up your DI plan. If you think about, the safety measures on a car, DI is kind of like the brakes. You use the brakes more frequently and they're much more applicable in a lot more situations. But if something really bad happens, you want the airbags, and critical illness is those airbags to be able to assist your clients in those particular circumstances. What about the additional money that we're not considering? This is just lost wages that we were talking about prior to, right? That's money that you just don't earn. Well, what about the extra expenses now that are going to be incurred because of this diagnosis? Well, she lives 200 kilometers away from the hospital that she needs to receive treatment. She has 6 cycles, 3 days of chemo per week, followed by a rest period of 25 days. She's a mother of 2, a 7 and a 9-year-old. So let's take a look at that. Now, fuel, cost of fuel. Now, that bear in mind, this presentation was done before inflation and before the war in Ukraine. So that $1.04 per liter has shot up to about $1.70. Depending on where you live in the country. I know, I'm sure in Quebec it's way worse. In Ontario, I just drove past a 184 price, which is just absurd. So that number is going. No, let's just assume for a second that number is closer to $1,200, not $800, because that's probably more applicable. What about hotel expenses? Again, all these numbers were done pre-inflation, so all of them are going to be higher than what you're looking at right now. But you've got parking, like $15 a day. That's a joke. That's definitely not what you get to pay in a GTA hospital. You're looking at like 30, 40 bucks a day. So let's just wipe that for a second. And then we look at a hotel stay, 120 bucks per night. That's a little bit more reasonable, just given that hotels aren't as busy as they used to be. So you get better deals. But food is going nowhere but up as well. And then, of course, there's maybe some vitamins and supplements to help assist your immune system naturally, if that's something that you're interested in. Well, what about taking care of the home, taking care of the kids, any kind of other wigs or prosthetics? Again, all these things are going to add up. Now, some of this might be covered underneath Janet's health and dental plan, but not everything. All in all, you're looking at that. This says about 10,000 bucks. It's probably closer to 13, 14,000 now in additional expenses over and above the lost wages. I had a question. Not quite sure what that means. It's someone else's time. If you wouldn't mind expanding on that a little bit, by all means, I can certainly provide clarification. Point simply being here, folks, that the cost of cancer is exorbitant. It's all encompassing. It isn't just one particular thing. It affects your entire life and your entire financial future. And more than anything, having a buffer, the buffer usually isn't enough. I hate to break that up, but I mean, if you ever go and speak to anybody who has had CI or DI and collected on it and said, was that enough? They'd always say no, it's never enough. But did it help? 100% it helped. And it probably avoided catastrophe as opposed to just maybe scraping by. Point simply being is that you don't ever wind up on a GoFundMe page looking for assistance for individuals. Don't get me wrong, nothing wrong with going out and asking for a helping hand. And I think that's, if that's the last place you can go, then by all means. But that should not be a financial plan. That should be a last resort. Okay, we got some clarification on that question here. You need someone to drive you, watch the kids, and they have to take some time off work. What is the estimated cost there? So we looked at the numbers we were using showed 10,250 give or take for additional expenses and about 29,000 lost wages for 1 year. So all in all, you're looking close to about 30,000 in overall cost or opportunity cost lost during that period, not including inflationary pressures, which I'm going to argue pushes that number probably closer to 40,000 as opposed to 30. But again, you're looking at, if in her case there, if it's about 40,000 on 100K, 40% of your overall income being taken away essentially by both additional costs and expenses. That person's probably still going to need some assistance and probably have to pull some money over and above that too. But the whole point here is that even with a perfect disability, this person has disability insurance, they're still losing that much money. In terms of solutions, we talked about all the problems here. We know that cancer insurance is needed. Well, first and foremost, we get tied into, and if you're a broker, and as I am as well, I'm very familiar with the 25 illness type plan. And if you're looking for somebody who's younger and wants like 250,000 CI, then by all means, your larger carriers, your Manus, your Canadas can really be helpful in those scenarios. But if you got somebody who maybe already has a policy, maybe 100 grand with you, it's about 10 years old, 100 grand doesn't buy you much anymore in the form of providing a financial assistance. Why not give those individuals a cancer top up? Okay, so this isn't to replace those plans. This is to complement that. You can give them a cancer only plan for as little as $10 a month. Now, granted, an extra 10 grand probably isn't going to do a whole heck of a lot, but we can do 25 grand, 50 grand, even 75 grand if they're healthy enough. The whole point is that you can limit the additional costs by only covering off cancer, which you're covering off, again, about 66% of all claims, and moreover, provide additional assistance for the particular ailment that is going to probably cost the most if they get into that situation. Heart attacks and strokes, you have the benefit of either you tend to get over it or you pass away. Now, granted, strokes, there could be some variance there, but heart attacks in particular, you can have a heart attack and walk away from that 2 weeks later. Cancer, that's minimum 6 months. That's financial purgatory. You probably need additional assistance. And moreover, if traditional chemo doesn't work and you end up on gene therapy, if you've ever spoken to anybody who's ever had to do that, it's an exorbitant cost. Even if they had, 75 grand with us and 100 grand through another provider, that's 175,000. That might pay for 2/3 of it. That might pay for about, 66%, depending on how many treatments or rounds that you go through. Cancer is the biggest risk. Why not provide more coverage for that specifically? Now, moreover, you don't have to just sell them just cancer insurance. It can be cancer by its own, but it can also be cancer, heart attack, stroke, coronary bypass, coma, and paralysis. That product basically is then covering off 90% of all claims comparatively to a 25 illness policy. And again, an excellent complement. And if your client doesn't already have some sort of critical illness in the background, it's a great place to start to, again, get something in place before they go through any kind of level of underwriting. By all means, if they want to go to that full level of underwriting and get a much larger policy, great. Do this first. This can be enforced in 15 minutes. That process is going to take you some time. So those who have never visited prohealthinsurance.ca, I highly recommend that you do. Go take a look. It's the quoting site to provide some additional information and documentation. So you can feel free to play around with a little bit and get a better sense of both the cost and the process. Got a question? Is this tool offered as a group plan or as a grouped individual plan? Great question. So this plan is offered to individuals. It isn't done on a group basis. However, I have worked with some group producers in the past to offer this as a complementary product to their plan administrator. So basically you can take this plan, go with some marketing material that we have on hand, go with them and say, hey, I want to be able to speak to your group about cancer insurance as a great complement to what you already do. And as a opportunity to provide additional insight and coverage for those individuals who probably don't have enough through the group. They might have a little bit, but I have never seen a group that's had more than 25 or 50 KFCI in their group plan. So it's an excellent way to top that up. It's also an excellent way to provide coverage for those individuals who have lost their group benefits because they're 65 years old. Once somebody turns 65, they lose the vast majority of their benefits. ProHealth Insurance has got some excellent solutions, including this one, to allow individuals who are that age to continue to maintain coverage all the way until age 90. So a lot of great, interesting solutions there, but fantastic as a group complement. I have another question. How long do you have to hold the policy before there is a payout? Is there a percentage of payout as the 2-year incandescibility is finished? Great question. And no, this is enforced from day one. There are a couple of requirements that are needed when you go through a claims process. One is 30-day survival. So there is a standard 30-day survival period for all ailments that are covered underneath the plan. You need to survive that period. Second is the 90-day moratorium period. So like most other CI coverages out there, if you develop cancer symptoms that lead to cancer in the first 90 days of coverage, that is not covered. But assuming you get past that point, everything else is covered immediately. So no, I mean, even with the 2-year incontestability, I mean, we will go back again. This is an instant issue product, so obviously we'll verify that the answers were answered correctly. But the answers are very straightforward. It's, have you had cancer being investigated for cancer in the past? Do you have AIDS, HIV? Those are the two main contestability questions, and people will know if they have those concerns. We'll talk a little bit more about the eligibility in a moment, but point is that it's immediate coverage. Oh, another great question. Is the premium YRT priced? No, it is not. It is age banded every 10 years. So every 10 years, the policy adjusts for age, but it's not like a traditional renewal where the renewal is exorbitantly more expensive than a brand new policy. It's like buying a new policy every 10 years. The cost is the same as if you were to buy it at that point. You just don't have to requalify at that point. So whether you're buying a new policy, like let's say somebody buys that's 55, okay, it renews at 65, they're going to pay the same as a 65-year-old buying a brand new policy at that point. Oh, keep them coming. If a 70-year-old doesn't currently have CI, can he apply for this? Yes, he can. Thank you, Victoria. We can apply for anybody who's 15 days old all the way up to age 80. And the coverage will last until age 90. All right, so let's get into some of the details here. So you can take as little as 5,000 all the way up to 75,000 in coverage. There's a couple of extra provisions in the coverage that make it more appealing. One is a 15% early intervention benefit. So if you catch one of the 7 early intervention cancers, like prostate, skin, thyroid, or just to name a few, 15% of the face will pay as a early intervention benefit. If it becomes life-threatening, the remaining balance will get paid out. Now, what happens if you pass away before you've had a chance to use this policy? Well, if you pass away before that point, it doesn't matter what the reason is, but if you pass away and this policy is still in force, your beneficiaries will still receive 15% of the face. So there is a quasi death benefit built right into this plan that works as a final expense assister. So on 75,000, that would be about 11,250. On 50,000, it would be at 7,500. Not a replacement for life insurance. I want to make that very clear, but it is a way to assist with some final expenses and to give your beneficiary something, even if you didn't get to use the living benefit while you owned it. To clarify, are the brackets 10 years for a price change? So yes, so it's not a traditional age band where it's like, once you, like, let's say a 59-year-old bought it and then the rates change at 60, which is what occurs. Your rates are not going to change next year. Your rates will be locked in as a 59-year-old for 10 years, and then we'll renew again at 69 at whatever we charge a 69-year-old at that point. To be clear, that 10-year premium guarantee auto renews, guaranteed protection until age 90 or until you cancel it, one of the two, entirely up to you. I do always get the question, is there ROP on this product? And no, there is not. This is a risk mitigation product. It doesn't have the same ROP features. By design, truthfully, if you were to add ROP, especially for your 70 and 80-year-olds that are applying for this, the cost would be exorbitant. It just doesn't make sense. So that's why we excluded it. Again, issue age is 15 days old, all the way up to age 80. So a very large band there of individuals that you can now target with critical illness coverage that you couldn't target before. Okay. If you have people who have critical illness, even when they're losing it at 75, you can use this to top it up or replace some of the coverage that they've lost. A lot of interesting things that you can do with this product. And again, you can add the 5 critical illnesses of stroke, heart attack, coronary bypass, coma, and paralysis. So you're covering off the big 4 plus coma and paralysis as well, if you wish to take that additional feature. Interesting point here, from a sales perspective, about 55% of the time, clients choose the critical illness option. So that's the additional 5 conditions, which means 45% of the time they don't. And what's interesting about that for me, I mean, there could be 2 reasons for that. One is that they don't qualify for the other 5 conditions because they might say yes to something. So that's a possibility. But moreover, when you look at also the demographic of who buys this, it's primarily females. For every 3 policies sold, 2 are bought by women. That tells me, and it tells us from a market perspective, that women are more concerned about cancer, and rightfully so. Breast cancer, ovarian, cervical affect women much younger, and as opposed to prostate, which tends to affect men much later. Now, the other option here, so we've just gone through a really interesting solution for individuals who are maybe a little bit older and want something that's priced competitively that haven't had a major issue yet. ProHealth is a fantastic solution for those individuals who have not had cancer yet, who haven't had a major issue, and want some additional coverage to complement what they already have, or Maybe they've got a bunch of little conditions here, there, and everywhere, but no major event. And as such, still qualify for that product, but probably wouldn't go and pass through full underwriting. By comparison, without medical exam, so this is our hard to insure platform. And again, withoutmedicalexam.ca is where you can get some more information and quote out this product. You can cover anybody for as little as 5,000 all the way up to 100,000 coverage. But here's the kicker. It's only available for you people who are aged 18 to 55 years old and will go until age 65, not past that. Where this particular coverage makes the most sense is for individuals who've already had a major issue in the past. So maybe they've had cancer before, maybe they've had a heart attack, and they'd like to have something that could potentially cover that again in the future. This coverage can do that. And it's specifically designed for those individuals that are harder to insure. Now, the premium does reflect that. Comparatively, if you look at Pro Health versus this, Pro Health is going to be more cost effective, but it's also assuming that you're healthier. This is going to be a little bit more expensive because it assumes that you've had issues, depending on how you've answered the questions. Now, some other differences here. There is the standard 30-day survival period and 90-day moratorium. There's no differences there. There is no death benefit. There is a return of premium upon death built into this policy. So a small difference there. We also have a 24/24 pre-existing condition exclusion period, which obviously applies to those individuals who have had a major issue in the past. This one, however, does have a return of premium feature built into it if you'd like it, or sorry, that you can add to it. And that's 75% return of premium after 20 years, no claim. So this is available for 45-year-olds and younger. So again, a fantastic option for those individuals who like the idea of ROP, but probably don't qualify for a traditional product. So in terms of who you would target with this, again, you really want to look at those individuals that have had a heart attack before. Maybe they've gone through cancer and they want something that might cover that again. The pre-existing condition exclusion period will eliminate those things that have been active in the past for about 12 or 24 months. But after that point, assuming that they've been stable and in remission, for example, they will be covered again. It's one of the very few products that will do that. So a fantastic solution for those individuals that will not get CI ever again, and you don't even qualify for Pro Health. This can actually be used, you can use Pro Health to complement this one and vice versa, depending on the circumstance. But a great way to offer, some good core coverage to those individuals who just simply can't get anything else. When we look at a side-by-side comparison, you really get to see where the target market is for both products. For insurance without medical exam, again, 18 to 55 years old. So you're looking for adults that have probably had an issue in the past. Whereas Pro Health, 15 days to age 80 is all encompassing. It can be used as a hard to insure solution for children. It can be used for individuals who are over the age of 60 or 65 who no longer qualify for additional critical illness. It can be used as a complement, as a cancer-only plan, as opposed to, cancer plus heart attack, stroke, coronary bypass, coma, and paralysis. You can use Pro Health is a little bit more adaptable in that way. In terms of covered conditions, IWME is always the big four: cancer, heart attack, stroke, coronary bypass, and the premium reflects that. Pro Health being cancer as a standalone or cancer plus 5, again, more flexibility there. Both have pre-existing condition exclusion periods. That said, it's not going to apply as much to Pro Health because it's going to ask you if you've had a major issue in the past. And if you have, usually it's going to exclude you from that coverage. So the only time that ever comes into play for Pro Health is for individuals who might have, say, high cholesterol or high blood pressure, and then they have a cardiovascular event in the first 2 years. That's where it gets a little bit, you might have an issue there. But beyond that, there is no other case where it really comes into play. In terms of built-in features, again, return of premium upon death for insurance on medical exam versus a death benefit, an early intervention benefit for Pro Health. The term available for the insurance on medical exam is either T10 or T20, and again, RP can be added, whereas Pro Health is a straight T10 age-banded product. The renewability is a big difference. One is to age 65, the other one is all the way to age 90. So you can see there why Pro Health is more stringent on its concerns, because it'll cover you much later. So let's take a look at some case studies here, okay? We have a 35-year-old female here, Anna. She's a non-smoker looking for 50,000 coverage. She looks perfectly healthy, but you find out through a conversation with her that she actually does have MS. And because of that, she is not eligible for any kind of living benefits, period. She's on medication, but she hasn't missed any time off work. So which product do you think would fit best? Well, when we take a look at insurance on medical exam and Pro Health, we can actually offer both. We can offer the insurance on medical exam, the 4 conditions for a T10 or T20 rate. Because she has MS, she is not eligible for the other 5 conditions on Pro Health, and as such, you can offer cancer only, but not the other 5. So depending on the level of coverage that that individual wants, you can use both, or you can lean towards the more comprehensive, which would be insurance on medical exam in this case. What about Jeffrey? He's a 45-year-old male. His biggest issue is that he smokes marijuana regularly, daily in fact. Looking for about $75,000 in coverage. He's been declined due to marijuana usage. Again, which one do you think might fit best? Pro Health or insurance on medical exam? Again, we can offer both. What's interesting about Humania, if you didn't know already, we don't consider smoking marijuana on our simplified products to put you into a smoking status, regardless of the amount smoked. So as long as you're not using tobacco or any kind of nicotine-based product over and above the marijuana, you can smoke as much marijuana as you want. You're still a non-smoker with us. So that's a huge deal when we look at that. Now, bear in mind, we're not talking about 500,000 coverage here. We're talking about 50,000 in coverage for the insurance on medical. Sorry, that's a typo. So you can look at both. Again, the 4 conditions here for insurance on medical exam, either on a T10 or T20 basis, depending on the level of coverage you're looking at. What's interesting, though, again, the difference is on how you ask questions. Pro Health can offer 50K, not above that, because he's been declined. There's a decline question there, which will cap the amount that he can get. Pro Health does not have, insurance on medical exam does not have a decline question. So again, some variance there of which one might make the most sense. What about Cindy? Cindy's 50 years old. She's a non-smoker. Her biggest issue is height and weight. She's 350 pounds and she's 5'5". She's not on any kind of medication and is healthy otherwise, looking for a little bit of CI coverage. From a height and weight perspective, which one do you think would be the better coverage? Well, the fact is you can use both. Insurance on medical exam can use 4 conditions, again, on a 25,000 T10 basis. But if you look at Pro Health, actually, Pro Health is more effective from a premium perspective, and it'll go past 65. She's 50 years old, so her coverage is only going to last about 15 years. Pro Health will go all the way to age 90. So actually, in this case, I mean, you could use both, but I lean towards the Pro Health in this circumstance. What about Guy? He's 40 years old, male non-smoker, looking for about 100,000 in corporate coverage with ROP. So trying to do a split dollar CI type situation here. Problem is that he had a heart attack 3 years ago, and as such is being declined no matter where he goes. Well, because he's looking for the insurance or the return of premium, insurance on medical exam is the only thing that can be offered to him. You want to lean towards the T20 here because the T20 is at least be level for that period of time, whereas the T10 will jump on you in 10 years. The return of premium, expensive, but again, if you're doing a split dollar CI situation, it wouldn't be that bad, if he has the additional retained earnings to justify it. Pro Health obviously would be more cost effective, but it is for cancer only. And what about Clarissa? She's 37, female, non-smoker. Unfortunately, she had ovarian cancer 4 years ago and is looking for something to cover it again. Well, you can see here, Pro Health, that's where we draw the line. If you've had cancer before, you can't get Pro Health. So insurance on medical is the one that you want to lean towards here because she's a harder to insure scenario. Let's take a look at Josh. He's a 25-year-old smoker, overall fairly healthy. His biggest issue is that when he went through a medical, he admitted to some cocaine use not that long ago, and as such is not eligible for your traditional CI coverage. When we're looking at the different options here, you can actually go for both, and both are going to be priced fairly competitively. I always make the joke, we ask if you've had a problem. We've gone to rehab before, but we don't ask you what you do on the weekends. So you like to party, like to have a little bit of fun, as long as it doesn't affect your life and you haven't been ordered by the court or by your doctor to get some help, go for it. You can do whatever you want and qualify for our coverage in the meantime. Now, switching gears for a second, talking about children, I know I briefly alluded to it when we're talking about the age range for Pro Health being 15 days old all the way up to age 80. When it comes to children, we can actually be quite effective in those harder to insure scenarios, somewhere where nobody else has any kind of presence. So in this case, Vicky is a diabetic. She was diagnosed at the age of 4. She doesn't have a family history of it. She does have a insulin pump in her stomach to monitor her overall blood sugar levels. Her parents are worried and they want to give her a little bit of coverage, but obviously having some very hard time doing that. They come to you asking for solutions. Well, when it comes to insurance on medical exam, that'll work just fine. It'll be cancer only because, again, diabetes does play into whether you're eligible or not for the other 5 conditions. But bear in mind 2 things, right? Not only can she get coverage for cancer, but the cancer coverage also has a death benefit built in. So she can actually get $11,250 in the form of a death benefit if she took $75,000 in coverage here. So when we take a look at the different competitive advantages and where both fit well, Both coverages do not ask about height and weight. So if you have a height and weight problem, that's one of our key competitive advantages at Humania. So you want to think of us in those circumstances. Neither does an MIB check. So again, when you go through the questions, you want to be perfectly clear that you have to make sure those answer those questions correctly. But beyond that, we're not going to go back and double check. So you're not going to end up with an MIB hit on the system. Both are instant issue. So it doesn't matter if you're doing it over Zoom like this or in person, that coverage is going to be enforced after the client clicks the accept button in their email. Both coverages look at marijuana as a non-smoker. So even if there is heavy marijuana use, you can use these products without having to worry about any kind of smoking status or any kind of exclusions. When we look at insurance on medical exam, really it's the harder to insure stuff that's really makes sense. Those are for cancer survivors, people with HIV, for example. Maybe they've had a recent cardiovascular event, that kind of thing. When we look over at Pro Health, its major advantages are that you can issue it all the way up to age 80. It's renewable to age 90, and rates are locked in for 10 years. So you're really providing coverage where nobody else can provide coverage unless you're selling permanent CI, which I don't know about you, but that didn't get sold a ton when I worked for an MGA, and I never sold a permanent policy when I was in the field. So, yes, that can work for some individuals, but this is a fantastic option for individuals who are looking to the cost-effective market to provide coverage further and longer into retirement. In terms of who you can target and talking about your sales here, okay, first and foremost, you want to target your 55-year-olds. If you're an investment broker listening in on this, I'm wondering you for some new interesting ideas. Selling CI as a hedge, okay? We talk about interest rates, we talk about inflation rates, we talk about market risks, government risks. How often do we talk about the risk of needing that money in a downturn? Like imagine you're going through a cancer treatment and need an influx of cash in April or May of 2020. Now, how awful would that be? You have to sell off some of your investments and securities at the worst time, right? Or even right now. It's not like the markets are shooting the lights out right now either. Point is that needing that money early is just as big, if not a larger risk than any kind of interest rate or inflation kind of concern. Most of those things work themselves out over time. You needing cash or funds in a specific situation, that doesn't. There's no pushing that out. Shifting gears again, talking about children, for those of you that are in the family market who want to be able to provide coverage to their parents parents who have autistic children, for example, this works very well. We also have some great ideas providing life coverage to those individuals too. So if you do work in that space and want to be sort of a niche and run a campaign for, again, harder to insure children, we've got some excellent solutions there. Maybe there's clients that you never approach because of their age, because you just want to avoid the underwriting process. You just don't want to bring it up because you think it'll lead to a bad experience and just irritate your client. Nobody wants to do that, and I can totally understand that. This bypasses that. You don't have to worry about that. Either they can get through the questions or they can't. So either it's a quick, oh, I had an idea. Oh, I'm sorry. I didn't realize you had this in the background. You don't qualify. That's a worst case scenario. Or best case, hey, there's this new product out that I think would be a great fit for you and you qualify. Want to go ahead? And in 15 minutes, you got yourself a sale. Doing an email campaign, again, the cancer top-up idea. For those individuals who already have some living benefits with you, or maybe have a group plan, this is a great option as a top-up idea. Whether it's a cancer top-up by itself or cancer plus the 5 other conditions, you're covering off and giving more funds towards the core risks that really the policy is meant to cover off. When 90% of all claims are 4 conditions, there's no sense in putting together a whole other plan and a whole other CI policy, go through a whole other underwriting cycle when you easily just top up what they already have. So just to sort of hammer home the point here, take a look at somebody like this, right? You got a 65-year-old male, healthy but a little heavy, so right on the cusp of not being able to be eligible anymore, right? CI with a traditional carrier, you're looking at a T75, 25K, 3 conditions, looking at 146.73, and that's going to require blood, urine, paramed, APS, and it's going to be rated because of the build. With us, 25,000 coverage, again with the 5 other conditions, you're looking at 93.75 per month, no medicals, more conditions, going all the way to age 90 as opposed to 75, and it's done in 15 minutes. Again, this is a whole other market that is just untapped, and is a fantastic way to say, when you're going, especially going into retirement, if you ever have the situation come up, the one benefit of medical science getting much better is that people are living longer and going through treatments and getting better over time. Problem is that there's a cost with that. This provides that buffer. Also, when you're going through, don't forget that Humania, beyond critical illness and offering some very unique solutions, also has some very unique solutions for life and disability declines as well. This is an example of the email campaign that I've run specifically with a number of advisors and has been fairly successful. So this is just a blast that you can send out to 10 to 20 clients a week that you can follow up with and then gradually go through your book of providing that cancer top up. This is a nice little email template that I can certainly share with you later on if you wish, for you to be able to use it with your clientele. We have a question here. Someone has a mother that had breast cancer in their 40s. 15 years ago, they are 54 and one critical illness, never had cancer. Will they be rated refused because of family history? Great question. So both products do have a family history question, but it doesn't preclude them from getting coverage. It just adjusts the risk. On Pro Health, we're going to ask if one member had breast, ovarian, or colorectal cancer. So in this case, that would be a yes. So it's going to cap them at 50K benefit and provide standard pricing. We have two pricing models, one standard, one is preferred. So this would be standard. It's not exorbitantly more, but it is more comparatively to the standard offer, the preferred offering. When it comes to insurance on medical exam, because it's two individuals, we ask if two or more members have had a major issue before the age of 60. So in this case, that would be a yes. They would be eligible with no exclusions or anything like that, but they'd be paying bronze pricing, which is the higher risk rate, which will be more comparatively to, say, the Pro Health. But both options can work. So feel free to reach out to me a little bit later on there. And if you want to run through those scenarios and get some pricing, happy to do that with you. Another question, does early intervention cancel policy on a 15% payout? No, it does not. Okay, the 15% will pay out, but think of it as if you had 50,000 and you get $7,500 out of it, that policy is now worth 42,500. So that's how that works. The policy still remains in force. It's just like you took a withdrawal of a portion of that amount and you continue that on. We have a question, will we be able to get this? I'm not sure what you're referring to necessarily, but as far as the coverage is concerned, if you're eligible, yes, 100%. If you're referring to the presentation, if you want a copy of it, email me directly and I can certainly supply that to you. All right, so in terms of the other products available on these harder to insure platforms, you've got the life coverage, so up to 300K on a T10 or T20 basis. We do offer T100, but it's a maximum of 50K. And again, on the harder to insure front, I would say, depending on the scenario that you're looking at there, the unique product within that subset is the T100. It is quite good as a final expense type plan. Level to 100, no cash value, very basic, but does the trick for that very specific usage. The term can work for a number of different areas, but we are very competitive, especially those circumstances where somebody isn't qualifying for anything, or the best that they're getting is deferred coverage. We might be expensive, but we might be the only game in town, especially for those corporate cases that require some coverage to be in place in order to get a corporate loan, for example. We can be quite helpful there. Critical illness on a T10 and T20 basis, I've just gone through that, so I won't bother going through that again. But on the income insurance and the debt insurance, this is, again, Simplified DI. It's one of the unsung heroes as far as I'm concerned on the platform. It is the only simplified accident and sickness benefit that you're going to find on the marketplace. So again, for those harder to insure clientele that are looking for some disability coverage, we got some great options for those individuals. When we look at the T100 specifically, we can offer that to anybody to age 18 all the way to age 70. What's great about it, as far as I'm concerned, the sweet spot there is people who are hard to insure, young adults that want some permanent coverage in place for final expense, but don't qualify for literally anything. This is a great thing to lock in because the pricing, especially for those younger individuals, is incredibly competitive. So there's a great option there. It also works well as a conversion option for those term plans sold on a simplified basis too. The T10 or T20 life coverage is probably the bread and butter of this platform. It gets sold the most, at least in my region. So these are your harder to insure individuals who aren't getting offers from anybody else or maybe getting deferred offers from other simplified carriers. We can be just as, if not more effective than some of the other simplified carriers, depending on the circumstance. So what I tell everybody is when you have a hard to insure case, think Humania. Have a look, reach out to me. I'll know if we're competitive or not. I know the product inside and out, and I know our competitors. So I can let you know if we can be competitive in that space or not. Just those who have sold this product in the past, if you when we're talking about the conversion has to be done on policies that are sold after July 6th of 2020. If it was before that point, it is not eligible for conversion just because that was when the product came into force. Contractually, things changed a little bit. On the T100, is also paid up at age 100 or does it lapse? Good question. It is paid up at 100 and will pay out upon death. So if you're still alive at that point, you no longer owe premiums, and the policy will pay once you pass away. The disability, both on debt and income, being accidents and illness, can be offered up to $2,500, and you can use both. So if you can prove $2,500 income, but you also have $2,500 in debt payments, there's no reason why you can't use both and utilize the platform on both ends. Both of them are always a 90-day waiting period and a 2-year benefit period, guaranteed renewable to age 65, and you can add the return of premium if you wish to. Another question, how can Humania insure disability for illness without medical? Would there be exclusions? There are exclusions, and if you'll notice there too, there is a 24/24 pre-existing condition exclusionary period. So for things that have already been an issue in the past, we do exclude that for a period of time, and because we only go up to 2 years on a benefit side of things, that's why we can do the illness side, because we do limit our risk per case. But by all means, if you want to learn some more information about that, it's not like we exclude everything. It's more a case of take a look at the natural exclusions that are on any kind of disability policy. But moreover, what this is going to cover off is those individuals who have maybe had an issue in the past, but are stable and remain stable for more than 2 years beyond the event and when they purchase the policy. I know it might seem a little bit odd for those that are more into the disability side of things, because if this is the first time you've ever heard of our product, it can seem a little bit too good to be true, but I assure you, the product is well built and designed to assist those individuals that can't qualify for any kind of illness coverage. In terms of the debt side of things, in terms of what qualifies under that, any contractual debt, including rent, is eligible. So basically, we'll pay the contractual amount, whether that's a payment or a minimum payment, that is what is eligible on a per monthly basis. As far as why you want to look at insurance on medical exam, the simple fact is with all of our products that I've talked about today, they're simple and easy online process. You can do all of these things in about 15 minutes. If you wanted to sell, in theory, all like 8 products at once, you could do that within half an hour. It's actually a very, very slick, simple, consumer and broker friendly process that's, again, whether it's not face-to-face or in person, can be equally as easy. These are affordable benefits, especially when you're talking about Pro Health. It was designed to be affordable and to be used by everybody, not just the more affluent. And as far as the hard to insure kind of thing is concerned, yes, there is going to be some premium reflecting about the fact that if they are particularly hard to insure, the premium will reflect that particular point. But sometimes, again, if we're the only game in town and it's the only option and it's a corporate case, something is certainly better than nothing. You can be assured that it's immediate protection. Okay, it is immediate process. It is immediate coverage from day one. Bearing in mind the 24/24 pre-existing condition exclusion. To be clear on exactly what that means, a 24/24 is a little bit harder to describe than a deferral. Deferral is easy. You don't get coverage for a certain period of time. But a 24/24 states that anything that is newly diagnosed or treated in the first 2 years prior to application that directly contributes to a claimable event in the first 2 years of the policy will be excluded. But you can see in there, there's a lot of benefit. One, doesn't exclude everything. It only excludes what's a problem. And moreover, if you have an issue, but it's been stable for more than 2 years, then the pre-X isn't going to come into play. It's going to be immediate coverage from day one. So although a contractual clause in there that you need to be made aware of is far more advantageous than a straight deferral. In terms of the application delivery process, to be clear about how exactly when you go through this application, what we ask for, when we get to the payment side of things, you can do pre-authorized debit or a monthly credit card, whichever you prefer. Now, I tend to lean more towards the pre-authorized debit myself, just because banking never changes, credit cards do. That said, some people really like their points, and they really like to get as much collecting can be done on anything. So there is that option for those individuals. Our process is signature free. So once you submit the application, what happens is an email gets sent directly to the client. They open it and click a confirm button. Once they click that confirm button, that acts as the signature, and then the policy is essentially enforced. Money will come out of the account in 24, 48 hours, and a physical policy will either be mailed or a digital copy will be emailed to the individual, depending on the product that you sell. At that point, a receipt and purchase confirmation goes to you, the client, and the MGA. Instant issue upon email confirmation. So once it's done, once you receive that email, it's in force. And I can verify that. I had a situation where somebody was going to go to the Congo for work and was actually in the terminal waiting to board a plane, walk through the client and the broker of how to get this done. And that person hit confirm, hopped on that plane. And because they hit that confirmation button before they got on that plane, they were covered at that point in time. The contracts are sent out automatically, again, by mail or email, depending on the product there, and all done, of course, on a secure platform. I have a question about the disability insurance. It says disability insurance, if a client has anything pre-existing, joint or any body pain, does it cover? So again, so if somebody has, say, like, back pain or some other concern and it's being treated as we speak, there has to be a level of stability and recovery in order for it to be covered again. If it's something chronic that will never go away, that's never going to be covered again because there's continuous treatment being done on it. You can't reclaim on something that was an issue for the first 2 years just because you had the policy for 2 years. There has to be some end to the concern. So it's got to be an acute situation, not a chronic situation. Hope that clarifies. So in terms of changes that you can make after the sale, so this happens all the time. When you go through it, you do have to, the insured and the policy owner have to be the same person. And of course, we're talking about corporate cases here, that can be a bit of an issue. So when you submit the application, it goes into force. There's a simple form, the assignment form, that can assign the policy to either another individual or corporation right at that time. So it's a simple form. Again, those corporate cases, I do it all the time. Not a big deal there. You can also change the payer. Again, the owner, the insured, and the payer all have to be the same person. That, of course, can be changed when you change the ownership. Smoker to non-smoker can be done as well. However, if you do want to go that route, we do have reserve the right to order a cotton and urine test to demonstrate that person is no longer a smoker. And of course, you can always reduce face amounts if you wish to. Can't increase, that requires an application, but you can certainly decrease. So in terms of cancellation or an issue of a new contract, if you are going to increase the face amount, then yes, you've got to cancel and then redo an application. When it comes to ROP, you can't add ROP later. You have to cancel and redo the application, adding it at that point. Let's say, for example, when you did the application, that person was into the bronze pricing level because they were fairly close to their major event. But years go by, they recover. There's no longer any kind of concern over the timeline that we asked about for that 5-year period, for example. And in that case, they actually might qualify for a better rate. We don't adjust the rate for that particular plan. You have to rewrite it at a new age because it's like a snapshot in time. All of our products look at things in a snapshot in time. So if somebody is now no longer as great a risk as they were 5 years ago, then by all means, rewrite the policy for a better rating category, but you'll have to cancel the other one to do that. If you wish to convert a T10 to a T20, again, not a problem. You do so and then cancel the term component that you're converting, or reduce the face amount. Like if you go from, like, say, like 300 down to 250 to take 50K in T100, that's another option. By all means, if you want to learn anything more about this, you can always feel free to reach out to myself or one of my colleagues if you're outside of Ontario and Manitoba. It does appear to be, oh, nope, we just had a thank you there. You're very welcome. On the question front, if there's any final questions, I'd be more than happy to assist. Thanks very much for your time. I very much appreciate you spending some of your day to go through some of our critical illness options here. Again, if you want to go through any of that in more detail, feel free to reach out to either myself or one of our sales team. Actually, now that I'm seeing it, Roberta, who is my director, is now newly on mat leave. She's currently in labor, as far as I know. So congratulations to her. She's not going to be able to help you. So maybe reaching out to me if you're just west of either Ontario to BC, probably best is to reach out to me right now, and then we'll go from there.